Welcome back to the Robbins LLP podcast. Today we're discussing new allegations involving Cogent Communications, ticker CCOI. A class action has been filed on behalf of investors who purchased Cogent securities between February 29, 2024 and May 2, 2026. Cogent is one of the largest carriers of internet traffic in the world.
According to the complaint, defendants failed to disclose several critical facts about Cogent's optical wavelength business and its financial position. Plaintiff argues that the vast majority of the purported orders in Cogent's optical wavelength backlog were unlikely to ever result in paid orders.
The complaint also alleges that many customers in the backlog were unable or unwilling to accept delivery, even if Cogent could provision the wavelength on time. As a result, plaintiff contends that defendants materially misrepresented customer demand for Cogent's optical wavelength services and the true nature of the company's backlog.
Plaintiff further alleges that Cogent was not on track to achieve its revenue and margin targets, and that those targets lacked a reasonable basis. The complaint also states that Cogent did not have the financial capacity or business fundamentals to maintain its long-standing dividend policy.
And finally, plaintiff alleges that defendant Schaefer's high-risk stock pledging activities created a material, undisclosed risk, specifically that he could be forced to sell large quantities of Cogent stock, further depressing the share price if the truth about demand and backlog issues were revealed.
Based on defendant statements about backlog, demand, and dividend stability, Cogent's stock price reached a class period high of more than $86 per share, only to fall to less than $17 per share in the days following the end of the class period. That's a decline of more than 80%.
Robbins LLP is now investigating whether Cogent made significant false and misleading statements and omissions to the detriment of stockholders. If you purchased Cogent shares during the class period, you may be eligible to participate in the class action. Some investors may also choose to seek appointment as lead plaintiff, the representative party who helps direct the litigation. And representation is on a contingency fee basis. Shareholders pay no fees or expenses.
That's today's update. Thanks for joining us on the Robbins LLP podcast. Stay informed, and we'll see you next time.